It's been an eventful 2 months for the nation of Zambia. More recently, the IMF approved drought funding, policy reform changes in the energy sector. The Ministry of Finance did present 41.9 billion kwacha worth of a supplementary budget, and the international rating agencies upgraded Zambia's long-term issuer rating. I'm Motisunge Zulu, Chief Risk Officer at Zanaco PLC, and with me is Andrew Chibuye, Country Partner of PricewaterhouseCoopers, on this special edition of Zanaco Unplugged. We'll delve straight into the issues. Welcome, Andrew.
Thank you very much, Muti. Thanks for having me. It's good to be here.
Okay, so exciting times we're in right now.
That's one way of putting it, yeah.
Great.
Yeah.
So let's start with the supplementary budget.
Yeah.
I think in my opening remarks, we did mention the fact that the IMF did approve Zambia's drought funding.
Yeah.
And a few days later, the Minister of Finance did present a 41.9 billion kwacha supplementary budget. It usually happens in September, but this time it happened somewhat in June.
Yeah.
Would you like to share some insights around what that money is for and anything that our viewers would have to know about?
Yeah, cool. Yeah. So, if you go back to last year, September, the Honorable Minister of Finance presented a budget for 2024. It was about 178 billion kwachas worth. And that laid out the plan for 2024, how money was going to be spent, what the priorities were, etc. The drought comes along in addition to other issues, the most notable being progress being made with debt restructuring. And all of a sudden, the numbers that were planned need to be relooked at. They need to be varied. Why? The debt restructuring, now we know the exact amounts that need to be paid for a significant portion of the debt that has been restructured.
Okay.
So about just over close to 15 billion being put into the supplementary budget to attend to that. In addition, the biggest issue, drought response, right? So the government looks at the various needs, the people that are going to be struggling, agriculture is going to be struggling, the economy generally is going to be suppressed. You've got issues with agriculture, you've got issues with power and load shedding. So generally, economic activity is going to be suppressed. So what does that all mean? It means the government needs to do more to support the economy, to support individuals, especially those who are considered most vulnerable. So what does the government do? 8.3 billion kwacha of that is going to support to the drought response. How is it going to be dispersed? The people who are deemed to be most vulnerable and already on what's known as the social cash transfer program are having the amount that they receive on a monthly basis enhanced from 200 to 400 kwacha. I think that's about 1.2 million households, if not 1.3. And then there's emergency social cash transfer. So an additional group of people who are deemed as vulnerable, who are going to be supported, also being given 400 kwacha per month. Then in addition to that, those who are perhaps not vulnerable, able to work, but the circumstances give them very peculiar challenges in terms of being able to fend for themselves, support for them in terms of cash for work. So do some work, get paid so that at least you can provide for yourself. Now, what's the general thinking there? The general thinking is that the environment as it is, we have costs, the cost of living escalating, right? The cost of living escalating, opportunities to generate income diminishing. What do? If you give people some cash, then at least you can help them weather this particular storm. Okay. So that's the second component of that. Then there's another component in the supplementary budget, which is repayment of amounts due for fuel that was procured and has been accumulated. I think it's about 15.2 billion kwacha, or $600 million there or thereabout. That's been set aside in the supplementary budget. The logic being the debt that is there at the moment is quite expensive and accruing quite a bit of interest. Need to bring it down so that it becomes a bit more manageable. So all in all, the supplementary budget is varying the original budget that was presented for this year.
Okay.
It's increasing the total spend overall. That's being financed by additional resources that have been received, additional borrowing that will take place, money that's been received from donors and cooperating partners.
Okay.
There's also money that has been received from the forfeiture of proceeds of crime and various investigations that have taken place. The biggest chunk, 17.2 billion kwacha, is actually anticipated to come from savings in existing budget lines.
Okay.
So that's a number that we obviously need to watch, but that's really the crux of it. So that's the long and short of what's happening with the supplementary budget.
Okay, so Andrew, earlier in the year, there was a figure that was shared by the authorities of about $940 million, more like a drought response amount. So, and I do know that Zambia has received IMF funding, and at the same time, the World Bank has also given Zambia quite a bit of grants and funding.
Support,
does that cover the amount that Zambia is looking for to be able to be resilient in these times?
I think so, at least based on the information that we've received. The situation is quite dynamic and volatile, I think, right? So how people will need a lot of help to come through this particular period. If you think about the impact, for example, of the drought, right? A lot of people went into agriculture quite a bit. They've lost quite a bit in the process. So you've lost your source of livelihood. Existing arrangements that you have probably crumbled because you now do not have the capital to set up for the next farming season. So not only do you need to recover the current season, you also need to be set up for the next. Otherwise, we're perpetuating the same issue. So it's the estimate that we have at the moment. I think it's being debated quite robustly, and we'll see how it sort of comes together.
Okay.
If I can then ask you a question as well, Muti. You did mention the issue of credit rating, which is linked to debt restructuring, which has been the biggest issue. So the drought, we were talking about debt restructuring. Now all of a sudden, it's sort of gone into the back of our minds.
Okay.
However, positives there in terms of adjustments to Zambia's sovereign credit ratings by all the major rating agencies, S&P, Fitch, Moody's. Why is that significant for Zambia, and what benefits do you expect to accrue from there?
So very, very interesting. So there's two parts there. There's the sovereign, which is the country, in this case, Zambia. And then there's the bond that had been defaulted on starting November 2020 in COVID period.
Yeah.
And that's where the default tag came in. So to take you back a little bit, I would say to date, Zambia has dealt with 77% of its debt.
Total outstanding.
So they've done bilateral debt $6.3 billion, which they started with, and then got onto an IMF program, which was precursor for successful debt restructure. And then there was this conversation with the bondholders. So Zambia defaulted on $3 billion worth of bonds maturing 2022, 2024, and 2027, of which those bonds have now been exchanged for two fresh bonds. So you have two bonds, $1.7 billion maturing 2033, and then you have a $1.3 billion maturing 2053. Of course, I won't delve into the base case scenarios and upside scenarios. So what happens is when you restructure your bonds trade in the international capital markets. In this case, those bonds were listed on the London Stock Exchange. So the interesting thing about issuance of a bond is a bond definitely needs to be issued with a strong and a positive rating and not default, or else pricing would be through the roof. So what actually happened with these three rating agencies is very, very interesting. And I would say it's a concept that has never been seen before.
It's novel.
Yes. So Zambia is still in the process of completing its debt restructure because there's $3.3 billion of sino-sure, that's Chinese debt, remaining. So what the likes of Standards & Poor's did was that they said, look, from a sovereign perspective, as a nation, you have not completed restructuring your debt. So what do? they gave a forward-looking view and say, we'll still keep you at selective default, but then a positive outlook because they are now confident that the process will complete.
Yeah.
But in the interim, the bond had to be exchanged. So for the bond to be exchanged, it needed to have some sort of
much better
a
rating.
much better rating.
But the benefits, Muti, what are the benefits? What do you expect?
Okay. So the benefits of a better rating, better than default, is that one, it unlocks the conversation around the pricing of capital. So capital has unfairly been priced because everyone that would look to provide capital to Zambia would be thinking of a sovereign premium, which is over and above what wholesale money would cost. And that was making capital very expensive. And because of that, it affected the private sector. But what we expect to see now is that credit lines are slowly becoming cheaper. And that speaks to growth because then you can access capital at fairer prices as well. The biggest beneficiaries would be your commercial banks. Commercial banks usually try and seek to get credit lines outside the country, but that default tag even followed anything that was from Zambia, including banks.
Hopefully they'll pass on that lower cost to the customers as well.
Well, ideally, that's what should happen because if you get capital at a lower cost, then you expect that you should be able to pass that on to that. So I think that would be the biggest benefit of a rating upgrade. It also puts Zambia in good stead for any appearance in the international capital markets. So should Zambia decide to go back to the international capital markets with a clearer plan for infrastructure.
That's a topic for another day.
Exactly. So maybe around this topic as well, there are a lot of other things that are happening within the space, such as mining. The average Zambian is asking, they've heard about big figures, $2.5 billion injected, Shaft 28, people are buying plots in Luanshya and dewatering and, all that mining investment that has come into Zambia. But there seems to be this argument and question. People are not feeling the impact of mining because right now, production is not concomitant with the investment that has gone in. And knowing that you play in this space, how do you reconcile the two?
So very, very true. Since May 2022, that's the date of the mining Indaba, when First Quantum made a significant announcement, the $1.3 billion investment, there's been a lot, right? A lot has happened. Barrick's announced $2 billion investment. Cobalt, in their exploration, I think they've estimated $200 million. They're now saying as they look to build a mine, they'll invest in excess of $2 billion, right? Barrick Lumwana, $2 billion in expanding their pit. You spoke about the CNMC and what's happening in Luanshya and their other assets. They talk about $1.3 billion. You add these all up, it's in excess of $5 billion. Now, what is happening, right? So not all of this investment is happening at the same time. So that's granted. But there is a lot that is happening in the mining communities themselves. We haven't even mentioned what's happening with Mopani Kompa Mines, for example. Their $1.1 billion investment from IRH. Now, it takes time. That's the long and short of it. Think of it like planting seeds or sowing seeds. Before you start to see the tree grow and reap the fruit from that tree, it takes a while. That's basically what's happening. But if you talk to the people in the microeconomies, in the vicinity, in the communities where this activity is happening, right? They'll tell you that things are changing, right? That things that they're starting to see the effects and the impacts of what is happening there. You go to Cobalt, where they're exploring a very good story, right? A few months ago, or when they started, maybe 70, 80 odd people, they're in excess of 200, 300 employees at the moment. Where have those people come from? What is them being employed doing for the communities there? When we talk about dewatering the Shaft 28 in Luanshya, what is that doing for Luanshya and bringing it back in terms of its operation and all the other assets that are happening? The Mopani Kompa Mine story as well. Now, there is a precursor to actual production. Everyone is looking forward to production for so many reasons. Looking forward to production because of the impact that we expect on exchange rate, for example. We're looking forward to production because copper is our largest export. It's a huge employer for the country as well. So there is a lot happening, but there's obviously a bit of patience that's required. And I think it's just a matter of time, and we'll see significant dividends coming through. Now, since the mining sector is such a topical, so topical for Zambia, biggest contributor and links very closely to currency, which I know you follow very closely. What can you tell us about the latest developments in as far as the currency markets are concerned? One moment, depreciation, the next moment, appreciation. There were some fairly stern measures taken by the central bank earlier around taking liquidity out of the market, which has caused other consequences around the availability of even local currency. What's the outlook? What are you seeing around currency, and what should we be thinking about?
So Zambia suffers structural issues in the FX space. Like you did mention, mining contributes about 70% of foreign exchange. But mining production has been under pressure. Last year, Zambia did just under 700,000 metric tons. That's about 688,000 metric tons. And because of that, that has put supply pressure. So the exchange rate is the price of money. And it's got two aspects. There's the supply side, which is constrained right now. And then there's the demand side. Because on the demand side, you have an economy that's growing. Zambia is a net importer. Growth for Zambia means more imports. You need dollars for fuel because we don't mine crude in Zambia. We need to import fertilizer for our support programs, which usually happen in Q4. And general spend, I mean, if you look at it at a retail level, a lot of people are buying things online and all that, put together aggregate. So what you have is a situation whereby you have your demand that is outwitting your constrained supply. And because of that, it is then manifesting in an increase in price, which is your depreciation.
The currency, yeah.
Exactly. And one piece of caution is that for a net importer, it seems in Zambia we have gotten to a point where we proxy growth for currency stability or currency stability for growth such that when the currency starts to appreciate or there's stability, people think the economy is growing, yet it's the opposite. So when you start to see depreciation power in the Zambian economy or depreciation pressure increasing and mounting, then you must know something is happening, because sometimes currency stability means there is no economic activity.
But the problem for Zambia is that because we are such an importer, you're then importing inflation. That's the biggest headache, isn't it?
We even import inflation. I mean, 33% of our import bill is from South Africa. So whatever happens with the rand and the volatility there translates to import inflation. So this is what we have. So what you mentioned was a situation whereby this volatility was causing a headache for the central bank. So the central bank had no option but to cause a balance. So one, you had an economy that had so much kwacha but very few dollars. You need kwacha to buy dollars. So what did the central bank do? They decided to suck all that kwacha out of the system to create a balance. There was a bit of stability, but then again the currency still ran away. So that is not a lasting solution. So I want us to look at the exchange rate slightly differently. Like, what is the variable telling us? So much as, yes, we all would like a currency that is stable, and we would all like to convert our dollars at a very, very minimal rate. But this currency has been telling us, one, on the supply side, we need to do more than just mining. We need to diversify. We need to export more through agriculture and get more dollars back and create a balance. And we need to be less Dutch diseased, over dependency on one sector for commodity exports and the like. And that's exactly what is happening. So all these developments you're seeing within the market, including talks around consultations, around currency, is the central bank now trying to navigate, because one, it's either you de-dollarize or you go outrightly for another rate hike. But a rate hike sucks money out of the system, pushes interest rates up, and it becomes expensive. And then you kill growth. So that's the biggest quagmire that Zambia is facing right now. Even as we are dealing with the restructure issues, there's still structural issues that we now need to rethink, because we've had these structural issues since 1964 and it's been sort of revolving.
But actually, and links to currency and demand, power is obviously
Yes.
an issue at the moment. And to import power, there's more demand for currency that's needed.
Yes.
But so obviously that just adds to the mix of what you've been describing. But then maybe to look at the overall power situation and what mitigants are there at the moment and what the impact is around expected to be for the economy. 2.3% GDP forecast growth, down from over 4.5%, 4.6, somewhere there, right? Is that even achievable given where the power situation is at the moment? 950 megawatt deficit is not one that you can plug very easily.
Look, Andrew, it's a crisis, number one. But I also believe that in crisis times, that's when you get, a lot of thinking, paradigm shifts in thinking, and silver linings as well. I must say that this problem is very worrying, and this is the worst drought that Zambia has suffered in 40 years. However, there have been quite a number of interventions that I have seen in terms of policy reforms. We're talking about net metering and all those developments that are happening where the sector is now being opened up. Tax waivers, if you're going to bring in renewable energy equipment. Speaking to agriculture as well, there is that burden that has been, removed to allow people be able to invest in solar or renewable energy solutions. For example, we can see a lot of retail customers are going off the grid to have standalone, solutions as well, and expediting of projects. You're talking about Mamba. Already there's talks around Mamba increasing that capacity an additional 300 megawatts, completion of projects in the northern Zambia where there are water bodies, because the skew is very interesting. You find that the bulk of your hydro is within the southern region, and that's the one that has been hit by drought. And then you're now thinking about projects, on the northern part of the country as well. So those are some of the things that are obviously happening. There's a financing discussion that's happening. There are banks, there are development banks, there are multilaterals that are all focusing on Zambia. In fact, it's not just a Zambia problem, it's a Southern Africa problem. How can they finance? How can they provide long-dated capital? I'm talking about capital that is more than 7 to 15 years for lasting solutions. So it's affected manufacturing, it's affected the retail space, and it's time to be innovative. And look, this problem is going to be with us for, I would say, predict maybe 2 years, Andrew. I mean, if we're going to look at those dams getting back to those levels, it might take 2-3 years, but something needs to be done. And maybe just talking around that, I mean, you are in this space, you've got a bird's eye view of the business ecosystem and environment as well. And there are all these struggles. What would your advice be in terms of survival and harnessing opportunity as well in light of this drought?
It's tough, I tell you. But, I mean, we have to soldier on, that's for sure. I mean, very briefly, obviously, survival is important. So you're running a business, even as a country, we need to look at where we can rationalize, right? So where can you cut? Where can you defer in terms of costs or commitments that perhaps are not critical? Because I think that's important for us to do, both as a nation, but as individuals, as businesses as well. I think it's very critical. There are opportunities that are there, right? I'm very sure right now the business for renewable energy solutions is booming. There'll be others that this environment provides, right? And those need to be exploited. There's still money that's going into key sectors. So mining continues to attract significant investment. That is going to benefit the suppliers. Who are those? How are we as individuals, as corporates, as entities participating there? I think even just from a broad principles perspective, a difficult economic environment with a weak currency should encourage Zambia to look significantly at exports as well as import substitution. The issue there is that you don't have as much power as you need to run that consistently, but it's an opportunity that's there anyway, because your exports are becoming cheaper, your imports that are becoming more expensive incentivize you to flip to something else as well. And so those are the sorts of areas that we probably need to be looking at, even despite these challenges that we have.
Okay.
And I guess maybe as we wrap up, your overall outlook for the year?
Like you said, it's very difficult, but I would say growth definitely constrained. I know the last focus was about 2.3%, but I see more pressure downwards, especially that we're picking sectors that are, grappling. Your telecoms is grappling. Your ICT would at least hold to some extent, but they're also impacted by power. Inflation as well is ticking upwards. Last reading was 15.4. I still expect quite a bit of inflation coming in from cost push effects, your energy prices, things linked to your FX, which is an anchor risk as well. I do know that it could have been worse, but there are interventions such as your winter crops and here and there, but food prices are still expected to be elevated, and we could see a bit of interest rate risk here and there to the end of the year. I don't expect production in copper to be significantly higher than sort of last year. However, that's in the immediate to the medium term, but forward looking, I expect to see a rebound. Like you did mention, some of the benefits of your mining investments should start to trickle in and cushion some of the effects that we are seeing from climate risk and climate change. And maybe on a positive note, the meteorological department has actually projected that we might have some, no more rain at the end of the year, and we're praying and hoping that that can, to some extent, give a positive cue to power generation as well, which is very, very significant, because even if we talk about mining still needs energy and power. Exactly. So I would say the next 1.5 years might be a bit bumpy here and there, but with recovery and light at the end of the tunnel, because by then even debt restructure, I focus, would have completed. But so in a nutshell, any closing remarks from you?
Yeah, I mean, thanks again for having me. There's a lot happening, that's for sure. I think all of us need to get invested in understanding what it all means and what part we can play to aid the recovery, especially for the country. I mean, we are all citizens. We all have a responsibility in one way, shape, or form. But the first bit is to understand what's actually happening and what is it affecting. So generally, short term, like you said, tough, but I'm always optimistic. I'm an eternal optimist. In the midst of the challenges, we'll tease out some opportunities, and we'll learn a thing or two as well about this challenging environment. I hope we'll finally get over the line with really diversifying this economy meaningfully, right? It's something that we've been talking about for many, many years, and it's something that we have to actualize. So I'm hoping we don't waste this crisis and the experiences that we've had in the recent past, so that we build a better Zambia for our children.
Andrew, thank you very much for